Welcome back to the Eric Krown Crypto channel. Wishing you a happy early start to this nice Thursday morning here as we get prepared for another Thursday. By the way, the statistics alongside Thursday, at least from my studies, have shown that Thursday is the most typical downside day for cryptocurrencies, especially over the past 2 to 3 month period now. With that said, it is time to also follow up on the higher term timeframes videos that we were looking at yesterday. Bitcoin obviously did not fulfill any of the pivot requirements for a nice bounce, thus downside more likely, and that kind of leads us to where we're at today. Other than that, I have a major announcement and a little bit more in a sincere tone as well, because you can actually get the Krown premium features now for free for the first 30 days, or the first, period essentially, because it is a monthly subscription. How can that go? How does that work? Well, the way that it will work is this. If you sign up to Bybit with the link in the description below, and then you buy the Krown Premium, Bybit will actually go ahead and award you that first month for free, just by depositing the money back into your account. With that in mind, make sure to, if you are going to be doing this, make sure that one, Bybit's relevant to you for one would be good. And then two, of course, make sure to fulfill your Bybit user ID within your within your profile on the Krown Chain application. Other than that, their prior promotion still applies with this. So wait, there's more. There's more fucking bonuses, right? Meaning that you still get a potential deposit bonus, but more importantly, or at least in my opinion, more valuable, is that yes, you will still get 30 days of 0% maker fees for derivative contract orders. Which, I think that's just like. I do think that's rather generous. So anyways, without further ado, let's just jump right into it. So yesterday we were looking at this chart over here, the daily time frame referencing the stochastic momentum oscillator for Bitcoin. And we were saying, hey, right now, or yesterday, the pivot to the upside was 22,300, meaning that if Bitcoin were to close above that level by end of day, expect a big bad bounce, which we'll go over the statistics for. However, if Bitcoin remains below that pivot, downside is more likely in the near term. That's exactly what happened in the more near term, with Bitcoin essentially retesting the lows that we did see from middle of February. So in this case, as far as the very, very short-term timeframes go, are things more likely to bounce here than not? Yeah, it can very easily bounce here. Of course, if we go over and reference this data on the 4-hour time frame for the HPDR indicator, we are looking at a move probably somewhere down around about 21.4. Actually 21.450, I should say, to 21.5 region. And it looks like we did get a wick down to about 21.550. So, is there going to be another wick down somewhere right around here, sometime intraday? Probably yes. But ultimately, short-term bounces can come from this region right here. Here's the thing though, just like yesterday, risk remains to the downside now, as long as Bitcoin remains below the breakdown level from yesterday, which is going to be about just below 22,000 bucks, about 21,950, I think it is. So that is to say that if we go over here to the daily, things become a lot more, in my opinion, interesting. So we've been following the daily HPDR indicator ranges, as Bitcoin did break below the 50% of historic returns range lows right here, which I will mark off. There we go. Once that happened, and we started to see volatility continue to increase over here, which it has been, the moving average, the white portion, continues to slowly move to the upside, even though it's very minute. It is continuing to move to the upside. That does imply that, yeah, downside is still more likely from this region, with potentially all the way down to the bottom side of the 80% of historic returns range lows, which is in the low $20,000 territory. So 20,200-ish region. I believe that would also fulfill one of the major CME gaps. Yeah, that fulfilled this gap play coming in from Friday the 13th in January, actually, if that does get fulfilled. But again, in the very, very short term, is Bitcoin more likely to bounce here? It's probably going to at least attempt to bounce. But like I said, as long as it's below yesterday's breakdown point, risk remains to the downside, and all bounces are just that, bounces before further continuation to the downside. Anyways, let me go back into the chart that we were referencing. I think it was this one right here. Okay, so we've got that. Now, here's the thing. Whenever we do see a bit of a breakdown, there's potential for a trap, and there, exists the potential for that yet again on this current daily period. Now, when I say exists the potential, it's just like yesterday. As long as the requirements for this are not fulfilled, downside is more likely, by definition, obviously, right? But what I want to talk about now is that the daily stochastic momentum pivot has shifted down from 22,300 now to 21,930. That is to say that if Bitcoin can close back above that level today, that would be a very early indication of a strong potential, very high likelihood, about more than 70% likelihood, as we'll go over when we get to the numbers, of a bear trap emerging with a sizable move to the upside likely to follow. But first, let me explain what that setup is and what that would look like. It's the same thing as yesterday, basically. Anytime that we've seen the daily stochastic oscillator get down, what the fuck was that? I thought that was Elsa for a second, but no, apparently it's a car outside. Maybe it's Optimus Prime, as Elsa just found out about Transformers, and she's like the biggest fan of Transformers now. She's like, we need to get an Optimus Prime. It's like we've been like buying this like nerd shit. It's like, actually would be kind of cool. Anyways, first movie's pretty fucking funny, I'll say. It's actually pretty damn good. Next few ones, maybe not so much. Anyways, so anytime that we see in the daily stochastic oscillator get down to about the 15 read, and especially lower than that, over the past 3 years, going back to 2019, and then crossing up from those regions, we've observed, pretty sizable bounces from that point. Is it perfect? No, absolutely not. We can see that this did actually happen right before March 2020, where Bitcoin got a small bounce before that, but soon after that, puking out another like 40% or so. But for the most part, this sort of a setup has precipitated actually all of the major bear traps in the last 3 years here. Do take note, however, there was no setups with this coming off of the major macro rally from like 6,000 all the way to 65,000 throughout 2020 to 2021. Why is that? Because you're not going to get fucking daily stochastic that low during an overall bull market, like obviously. So what does it tell you in this particular instance where we do see it getting this low? Well, Bitcoin is still neither bullish and, in my opinion, neither, macro bearish as well. I think that we're in a transitory period and going to be generally trading sideways for, the foreseeable future. On the higher term time frame schedule, obviously. Anyways, now that we've gone through that, and now that we've gone through yet again that this will not be validated unless a Bitcoin closes very specifically above 21,950 today on the daily closing basis. If that were to happen, the reason why I would say that there's a high probability of a bear trap is that these statistics have been relevant over the past 3 years with that particular setup. So, out of 14 prior iterations, 10 of them played out with a big move to the upside, or I would consider it a big move. The first major move to the next high was an average return of about 17.5%. So that would give it, again, 10 out of 14 is about 71.43% hit rate for, an average return of about 17.5%. If we were to make a first standard deviation of this is not like a fully accurate calculation. I could actually do it right now. Okay, 42, and then 24, 82. 82 right there. If we were looking at a first standard deviation for the average return, it would give us a range between about 10.5% all the way up to almost 25% over the course of an average of about 16 days. Again, first standard deviation would be shown to range between about 1 week to about 3.5 weeks, or let's just say 3 weeks, a little bit closer to that anyways. That would be more relevant. Now, of course, 10 out of 14 is not 100% hit rate. So in the event that we do see a loser, it's actually just as useful in my opinion, because it would give us an area of interest for the downside. And in fact, the downside returns were a lot more consistent than the upside returns. I mean, the upside returns were still pretty consistent, but the downside returns were very consistent thus far. Somewhere between like an 11 to 14% move to the downside, which would put Bitcoin basically, down around the $20,000 region. Of course, that would imply that, it has to cross up first here and then fail, but, it'd still be coming from the same area if it were to happen today anyway. So the numbers would still kind of, generally match up for like a low $20,000 target if that were to happen. But hey, let's say that Bitcoin does pop back up, close above 21,950 today on a daily closing basis. What could we potentially be looking at? Well, if you were to add about 15% onto current price action, that would put Bitcoin back around the $25,000 highs, which wouldn't even be a new high. I mean, it wouldn't necessarily be a breakout to new highs, or wouldn't necessarily say that just yet. But obviously, we take it one step at a time at that point. My point is that would be more relevant, statistically speaking, to be looking for over the next, over the next week to 3 weeks, essentially. Anyways, I think that's a good place for me to be leaving off on this particular video. Maybe we could go over a lower term time frame stochastic oscillators just to see where they're pivoted right now. 12-hour time frame is actually still pretty heavy to the downside, but in the critical zone here. We see a lot of these time frames in the critical zone or around the critical zone will turn up above $22,050 on the next closing period. 6-hour time frame will also kind of within the same region, turns up above 21,800 on the next closing period. 4-hour time frame, same thing, but basically same positioning, even has the same sort of trend line that you can see here as well. And that would be turning up above 21.8. Hourly time frame will be loading, and will turn up above 21.7. So you can see that it really wouldn't take too much for that to happen here, which is why I do think that it is, a possibility to be prepared for, as is really anything. But ultimately, it's going to come down to the daily closure. That would be the biggest one for myself. Until then, it's neither here nor there. And the prior setups, they're kind of contingent upon that, obviously. Anyways, that's a good place for me to be leaving things off. We already shilled Bybit, although, again, I actually do think that it's a pretty damn good promotion. Oh, I forgot to mention one big thing about it. Fuck. Jesus Christ, man. Sorry about that. This does not apply retroactively. Probably should have got that in the opening sequence. We'll get that in another video, of course, and it'll be explained elsewhere as well. But what you can do is if you create a new account, they will award you the same thing. And yes, they're aware of that. I've been told. So all good. You're completely allowed to do that from what I understand. If you just create a new account there using the link in the description below, and then do the purchasing on the Krown app for the Krown Premium, then you're good. So fair enough. All right, cool. That's it for today. Wishing you the best as always. Take care, much love, and see you hopefully soon.